I'm Hannah Moore, CFP, a practicing financial planner and educator. I'm on a mission to change the way people think and talk about money. Let's get started. Let's talk about a side of financial planning that isn't quite as sexy as saving for all your goals. It's what are the protections that you need in place on when you buy a home or after you bought a home. So I don't know where you kind of stand in this process, if you already own a home or you're thinking about it, but these are just really good financial principles to have in place. So when we look at buying a home from a financial planning perspective, there's going to be a couple things that I'm going to be looking for. One is a protection is just having a fixed interest rate. We are in a rising interest rate environment, and that's just going to become more and more important. We don't know what's going to happen in the future with interest rates. You can always refinance down the road, but having that fixed interest rate is going to just be good. It's going to be something that you can keep consistent and constant, which is really good. Okay, so fixed interest rate is one way to protect you when you're buying a home. So the second thing is going to be an emergency fund. And this is, again, sometimes it can be painful to see this much cash sitting in an account for you. Now, in general, we say 3 to 6 months of living expenses of what this can look like, or what this ought to look like for people. And there's certainly wiggle room around that. But the reason why I want to see an emergency fund, especially if you're considering buying a home, is because there are going to be home things that happen that you're going to have to be, you don't have the landlord just to call up and have them come repair something for you. So when I think of an emergency fund, specifically what I'm going to be, one of the things that if you're in the process of buying a home or looking to buy a home right now, I would rather you put less money down on your home and have a bigger emergency fund. I know that can sound crazy because you're like, wait, should I be throwing this money at my loan? And perhaps, but what you don't want to have happen is you don't want to get in a situation where your air conditioning breaks, you need a new roof, some unexpected things. We had to replace our cast iron pipes recently at our home, that whatever it may be happens at your home, and that you're stuck putting the money on a credit card or on a very not advantageous payment plan with a vendor or with a bank, but you actually have that emergency fund. And so it's going to be a critical piece for me when I'm looking at how do you protect yourself from that position. Now, we're going to get into some other planning topics that aren't exactly the happiest, but are really important. So the next one is going to be life insurance. This is so important when we look at buying a home, especially if you have a family, especially if you have children involved. But the reasons why, obviously, is that you want to be able to we want life insurance because it's going to be able to set our family up in a good position. So what this could look like is, so one of the reasons why we get this life insurance. So if you're married or if you have kids, there's a significant other in the picture. What it does is it gives them so much more freedom. It's going to allow them to stay in their home because what we don't want is something to have happen to you or your partner or your spouse, and you guys have to move out of your home because you financially can't afford it. That's a very, very hard thing for a family to go through. I've certainly seen it, and it's something that we want to avoid if at all possible. And so one of the great and easy ways to do that is by getting life insurance. And getting life insurance, if you're married or with a partner, on both of y'all. And making sure that both sides are protected. Because let's say you're the working spouse and your other spouse isn't, and they're at home with the kids or they're helping provide that childcare, you're going to have to replace that childcare expense. And that is not cheap. I'll tell you, childcare can get really, really expensive in that time. And so having enough life insurance to cover whatever that looks like for you. And again, people are going to be very different about how much life insurance they want to cover. Some people want all the debts paid off. Some people just want to replace income and say, hey, if I can just replace my income, they can still pay the mortgage. They can still do those things. And so that's going to be one of the things that we look at. So if you're buying a house and you don't have life insurance, get on that. Go get yourself some life insurance. It's going to be you're probably going to need more life insurance than you think. That's always one of the things whenever I do life insurance calculations from clients, they're like, whoa, that's more money. Not like monthly payment money, but just like more money than I think I would have thought, because we're really looking at kind of what are those factors that go into that. And perhaps we can have another podcast episode walking through those life insurance features. So another type of insurance that you're going to need is disability insurance, because what's the big risk, right? When we look at our home, our big risks are there's going to be a big something or other is going to happen to our home that we're going to have to pay for to fix it. Again, we could die, right? Us or a spouse could die. But the other big one is that there's going to be a disability event where you aren't going to be able to keep working. So this can look like, an illness. That actually is the number one reason why people have disability claims is an unexpected illness. It could be a car accident. It could be a lot of different reasons. It's actually surprising the number of people who have disability claims. It's always much higher than what I think it is. And so by having this disability insurance, what it does is it provides usually, and most policies that I look at are usually about 60% of what your take-home pay is. And so what's great about that is even if you're not able to work, you're still getting the income, right? You're still getting income in. And I've talked to a number of people on disability, and I'll tell you the thing they say is nobody ever regrets it, and everybody wishes they had more. So it's usually like 60% or like 75% are usually the numbers that I see. And so if you're working for a large company, a large one that has, a full benefits package, oftentimes it's included in that. And so what I would do is I would go and I would look at your next open enrollment and see if that is an option for you and make sure that you've opted into it. I've seen, a number of times where somebody forgets to opt into their disability insurance. But we definitely, it's an insurance that's just going to protect you. Because, obviously you dying is the worst case. The second worst case is that something happens to you and you can't do it. You can't bring in an income, right? And it's shocking the number of times that actually happens. And so when we look at that, so the disability, getting that covered again is a huge kind of peace of mind element on this. And the next kind of way to protect yourself when we look at your home, you're going to have, homeowners insurance policy, right? So that's going to be kind of hopefully a given, hopefully something that if you have a mortgage, they're going to require that you have it, right? Which seems appropriate. You're also going to have your car insurance. Now there's another type of insurance. It's actually the most missed insurance that I see. And that's going to be this liability or umbrella coverage. And so what this means is it is coverage in excess of your homeowner's policy and in excess of your car insurance policy. So they're usually done in large increments. If you're buying an outside policy, it's usually $1 million, $2 million, things like that. And so when we look at the policies for oftentimes with your mortgage, there'll be like a $200,000 or $300,000 like liability coverage is what they'll call it, and that's on there. And so this is, if you're buying a home, again, it's just another level of protection in case something happens to somebody inside of your home, and it is a significant accident. And so what you usually do is you have your home insurance and your car insurance. So most people have them together at the same company because you can get discounts for that. And what you do is you just call them up and say, hey, can I add some liability insurance, some umbrella insurance? They're going to know what you're talking about. This is a really common type of insurance, even though it's frequently missed. And so what they're going to do is they're just going to add this on top of your policy of making sure that you have that full liability protection. Now that liability, we usually want to see 1 to 2 times your net worth. That's kind of the rule of thumb, depending on your situation. So if you're in a position where you have excess, like you have your investments, you have a business, you have something else, definitely be talking to your insurance provider or your financial planner about how much you need from an insurance standpoint, because there's other things that you can do to kind of protect yourself on that side. But if you are buying a home, make sure to add this as a coverage. It tends to be a really affordable insurance. The other thing that it does is it makes sure that you're having appropriate limits on your home insurance and your car insurance. So you usually have to have a minimum car insurance level in order to get this umbrella policy. And so just make sure that you're protected in all of those places. So some just really, really practical ways of, if you're buying a house or if you already own a house, what can you do to protect yourself from a financial planning standpoint? So I hope that's helpful. Good luck as you guys are out there, buying homes or just making sure that you're fully protected. And I'll also tell you, it's better to do these things now. I mentioned life insurance. I'm working with some people right now who they didn't get life insurance when they could have, and now they've had a medical event or medical issue and they can't get life insurance. So if you've bought a home or are thinking about buying a home, definitely do that life insurance. Okay, one last piece. Forgot this. One last piece. Make sure to do your wills. So the reason why I say this is property makes things more complicated. And so depending on how your home is registered, and it's going to make things a lot smoother with that, because in some states it is assumed if you don't have a will, depending on how your home was registered or how your home was, the title was filed, it may go to your spouse, or your kids might be entitled to some of it, or it goes by state laws. And so the other big piece is making sure that you have wills in place so that you can get everything you need kind of covered on that side of it as well, in case something does happen to you, that it's going to go appropriately to who you want to go to, because that's, again, it's a huge piece that's missing, and you don't want to get the courts involved. You want to be able to make those decisions for yourself. So good luck as you guys do this, and let us know if you guys have questions. We'd love to answer your questions. Thanks for listening to this episode of Everyday Money with Hannah Moore. If you like what you heard, subscribe and check out livewealthynow.com. We have a lot more resources to help you live wealthy now.